Gives me great pleasure to bring on board none other than Vallabh Bhanshali to talk about the mega merger of HDFC Limited and HDFC Bank. And this indeed is a mega merger which will change the fortunes of the entire banking industry. Mr. Bhansali, this really is the deal of the season, or it may well be the deal of the year. How should one read into this big mega merger?
Well, it's almost epochal, I would say. It's much more than a season or a year. Because HDFC represents one of the most brilliant chapters of Indian corporate history, of course, financial sector. The vision started by H.T. Parekh. Not many people know about the great man of ambition, conservatism, customer service, frugality, the values, and then espoused by Mr. Deepak Parekh over almost 50 years. And what it has brought to the country, books have been written and many more need to be written about it. So this merger is like the final piece of a grand design that played out over the last several decades. So I think it's a great day for the sector, the market, and even for the country. So it's I'm very, very delighted to hear this development.
Is this what could be called as big becoming bigger, which is what is happening in the banking sector? HDFC Bank and HDFC Limited, if they are merged, not only it will create a behemoth, this also means that which way the trends or which way essentially the inertia is moving for the financial sector?
I would say that, you should also see this in the larger context of what's happening in India. India is changing. India's size is changing. The nature of its financial sector in terms of the penetration of financial services, credit, demand, number of transactions. I have seen the stock exchange transform. And, what was large once upon a time is unrecognizable today. It is so insignificant. And I think the same has to be seen in this, that this mega merger, while it may seem as very mega, I think this is the shape of things to come. So in America, for example, we saw large banks like Bank of America and Chase Manhattan, and some of those banks come together. So I think as countries' economies become bigger, as technology changes the nature of the service, you need a lot of size as a necessity. And therefore, while it may seem mega in that context, I think it is just appropriate in the context of how India is shaping, very fortunately for all of us. So therefore, size is important to service the India of tomorrow. And I think you will find all players becoming larger to remain in the same place.
If I look at the lay of the land, you got Axis Bank, which is growing by acquisition. You got HDFC Limited and HDFC Bank, which are merging and creating a behemoth. You got Kotak Mahindra Bank, which has not listed a single subsidiary, and ICICI Bank, which has listed all the businesses. The same banking sector has a lot of different players, and each one has a different niche strategy.
True. It depends upon how the institution came into being. HDFC as a housing finance company came in first, and then it spawned all the wonderful babies, and each one a significant player in its field. And therefore, its genesis is different from Axis Bank and Kotak Bank, the banks that you mentioned. And therefore, in that genesis lies their different design. But everyone has to look for size. HDFC, on it for its sake, for talking about HDFC, they have listed a number of their babies. So everyone has to list the babies. Everyone will have to, in a matter of time, if Kotak has not done, maybe they're waiting for the size to be the right, to be of right nature for them to list. But they will all have to list to remain significant players, to attract talent, to give the right kind of ESOPs to their people. So these are all market necessities, business necessities.
Mr. Bhansali, will HDFC Bank now become more like a must-have on everyone's portfolio? There was a time if you had Infosys was a must-have in everyone's portfolio. Reliance was a must-have in everyone's portfolio. Will this merged entity be like a pure play on Bharat and India now?
Very much. I think HDFC Bank was a must-own in any case. Maybe it'll become an even bigger must-own. And this will, irrespective of sector specialization, because this will be such a large weight of the index. Anyone wants to come to India, and because of its institutional character, because of its track record, because of its relevance to India's growth and future, this is going to become even a bigger milestone, which is very good for the country, that you need a few stocks of that kind that who not only set the standard for the country in various aspects, and not only just their sector, but they also become globally known amongst the financial players of all kinds and all sizes around the world.
So Bhansali, while on the PSU side, consolidation has happened by force and perhaps not by choice, but the PSU sector is consolidated. Large banks are consolidating. So what is the future for smaller banks? They don't have the reach, capital, or now they will also suffer in terms of return ratios.
As I said, size has become necessity because the country is becoming large, etc. And therefore, in the capital market, in the capitalism system, creative destruction goes on all the time. So, some of the smaller players will become relevant by merging into somebody. And they continue to exist in that form and shape. And we all got to accept it. So I don't feel very sad about it. This is an inevitable part of the journey of an enterprise, and more so in a dynamic country. So, well, yes, what you said, those things will happen. The faster they happen, better for everybody, for the employees, for the shareholders, and for the country.
And the other disruptive part, which is small but has taken big giant strides, is the entire fintech world. For someone who's looking at starting a fintech, or is already part of the fintech, when you see a news like this, what should be the first reaction?
Well, see, fintechs, they have their own niche. They have their own capabilities. Therefore, they don't get disturbed by size of players which were there, and coming together does not threaten a fintech as such. Those fintechs that are
we have lost him there. Never mind. All right, so we're going to stay with the story here. The story is that a new behemoth is going to be created. Now, what we are discussing with Mr. Bhansali is that if you look at the landscape of India, there is in Kotak Mahindra Bank. Over the years, they've bought their foreign partners and not listed their subsidiaries. You got in State Bank of India, which has been very liberal despite the capital requirement. They've listed almost all their subsidiaries. The mutual fund goes public very soon, and then you got the Uno app, which we don't know when it'll go public, but eventually it would. ICICI Bank possibly had listed all their major subsidiaries, whether it is ICICI Securities, ICICI Insurance, ICICI Lombard. And then you've got HDFC Bank now, which up until now was a bank with two small subsidiaries comparative to its size, the securities business and the vehicle finance business. But now HDFC Bank becomes the holding company in a sense for all the various businesses of the HDFC group. So the babies which were given birth from HDFC Limited, now those babies in a sense will become part of HDFC Bank. Let's take that break. We are in conversation with Mr. Vallabh Bhanshali, and I promise our viewers that it's a very riveting conversation, and we'll take it forward right after this short break. In conversation with Mr. Vallabh Bhanshali of the Enam Group. Mr. Bhansali, we lost you when you were expressing your thoughts on fintech and the fact that how will a fintech survive in today's disruptive world?
No, fintechs are there to disrupt others. So they don't worry about disruption as such. And a lot of fintechs get disrupted. So it's a part of their design. But I think an opportunity like this size, they create new businesses for fintechs. So, for example, what services they need to reach out to customers in more and more ways. And a lot of fintechs get into the food chain. So I don't see this as a necessary bad news for fintechs. It may be neutral to better for them.
What should investors do, Mr. Bhansali, for those who are currently, let's say, are betting on the Indian financial sector? Should they bet on size, scale, synergies, or it's better to focus on the other side, which is effort and disruption?
So I would say that there are two important things in financial services, or 2-3 things. One is cost of funds. Second is your safety. Third is customer experience. Those are more important. If you don't have them, nothing will matter. If you have them, you will definitely get size. And then if the size starts, resulting in that you have too high cost, etc., then you have difficulty. So there is a natural, what we call limiting and encouraging or boosting, mechanism here. So, I mean, PSUs were very large, but if the cost of operations, customer service went down, size didn't help them, and vice versa.
Mr. Bhansali, I'm taking the liberty of understanding the big macro picture also with you, because the headline, which in a sense last week was the global headline, was the global yield curve had inverted, and historically when that has happened, recession has come out. If a recession comes out, it's bad news for us, it's bad news for financial sector, it's bad news for everybody.
Let's understand, Nikunj, these are waves, but we have seen these waves become shorter and sharper. So, for example, right from the taper days, this recession has been around the corner, that this is coming. But if you look at, how technology is disrupting some of this. So you had geographical, innovation in terms of China becoming a large player. Now India is becoming a part of what China was doing, and technology expanding markets and reducing cost. So while in the traditional sense, yield curve will represent certain things, how exactly will it play out? Because, some of those R words and I word, they have a lot of images attached to them, but we need to redefine those images. Some slowdown is inevitable given the employment situation in America. We need the slowdown. So I think they're slowing down from their point of view. But does it mean slowdown for the whole world? I think the world is united and the world is divided in this more sophisticated technology setup. So I don't necessarily see that this is a recession of the kind that we saw in the 60s, 70s, 80s, or maybe in post-2008, when we had more than just a recession. We had absolute disruption of the world financial system in the world. So that was different. But after that, we are seeing far more nuanced play out of things. So you have like the taper tantrum, suddenly all markets go down, but in a few weeks, they start recovering because people are responding to the situation in different ways. I think that will continue, that people will respond in different ways. And we need to look at our ground reality a lot more than some of these big macro things.
Mr. Bhansali, when we spoke to you last was exactly on the budget day, and your thoughts were that the budget is transformatory in nature. It will ensure that the ease of business will increase, and inflation, in your view, was transitory. But has the war changed a lot of those assumptions?
So I would say that inflation is a threat, I said, and that, the fact of, the yield curve reversing, etc., the cost of funding, the ability to raise funds for the government and others are areas to be cautious about. And how exactly it will play out, but one does not know. But you are seeing commodity prices had spiked, had caused inflationary pressures, but they are starting to soften again. So world is a complex place. And this yield curve had, moved in one direction. Commodity transaction had moved, down in one direction for a long time. So some of that inversion was bound to happen. So some of that is happening. But some of the other positive things are also happening, which is what I had said. And said net, I remain extremely bullish about things. But obviously, one has to be cautious about, unprecedented things like the Ukraine war happens, or oil price goes up, but goes up a lot more than, and for longer than we think. So some of those things, those people who are not really long-term players, they need to be a little more cautious about it. Those who are long-term players, I don't think they bother too much about these things.
So you've always insisted on two things, which is that focus on the earning cycles and look at the entry point, which will give you margin of safety. So as of now, if one looks at FY23 and beyond, looking at the kind of picture, macro picture, and the margin setup we are staring at, how do you see the earning trajectory would move, and what is the margin of safety for long-term investor?
So margin of safety will lie in what stock you buy and what you can see there. Generally, specifically. Obviously, when markets are very high, all stocks tend to be higher, but that doesn't mean that there will be always counter-cyclicality. So I would say that obviously at high prices, when the whole index has risen, there is euphoria, margin of safety is lower, entry points, that entry itself is that much more difficult. But say, for example, commodity cycle, some of the commodity companies, maybe, looking at sustained earnings growth. The whole oil shock has taught people that, oil is not going away in that much of a hurry as people thought. There are additional trends like, what is the energy balance? That while creating a lot of renewable energy assets, there's a lot of a consumption of traditional energy. And therefore, they may not be as net, energy or net carbon neutral as people thought. So these are, trends and counter trends that keep coming out, and they are very interesting, which create entry opportunities. New businesses are coming out which are not understanding, for example, whole this lithium ion and the whole supply chain behind lithium ion batteries, because this is rather new and now the scale is building up. So something new is happening all the time in today's world, which creates new opportunities because the market has not studied them. And then you will get entry points there in best of time, worst of times.
I'm going to shamelessly extend my appointment with you because it's a rarity to get you on television. I have just few basic follow-up questions. If I look at the equity market, Mr. Bhansali, equity markets have managed to climb the wall of worry. You know that more than anyone else, that why markets managed to climb the wall of worry. But why are we getting two divergence within the two market? Equity market almost at an all-time high. Bond market is telling you a scary picture. Who will get it right? Who will get it wrong, sir?
One does not know who will get it right wrong, but one can understand, as we said, that if there are inflation worries, there's yield inversion in the curve inversion happening, in global and major markets. Some of these worries are inevitable. Some of the inflation at home is, is structural in nature, with commodity prices being so high, nobody can do anything about it. And one has to worry that because of supply chain disruptions, because of unknown reasons, these things can get out of hand, and therefore people will be cautious. So I think as long as these big factors of caution remain unmet, remain unmitigated or unsolved, some of these trends will remain uncertain. I think it just creates safety for the people that like an insurance, is better to buy it in advance rather than not buy it or buy it late. So I think most players are pretty okay with it instead of becoming too anxious about it. Trends will be up and down, but that's okay. As an equity player, we are quite okay with markets going down from time to time, because I think it's very healthy and necessary.
So do you see, sir, there is a possibility and a probability next 3 to 5 years the returns could be in early teens?
Sorry, I didn't get your question.
No, my question is that, do you see, sir, there is a probability and also strong possibility for an average investor to imagine that next 3 to 5 years we are in for double-digit returns?
Very difficult to say these things, but over longer the period, the more certain you are that you will make reasonable returns. And obviously, it depends upon your portfolio constitution. So if you are, aligned with well-managed companies with some, their profit protection built into their market strength, etc., some of that can be expected.
Sir, one just last follow-up question. A lot of global commentators are linking this war as the end of globalization and beginning of Cold War second. Okay, I think we've just got him on a terrible line. And just when I had a very direct question on the most important point right now, that is this end of the globalization and beginning of the Cold War 2. We'll hear out Deepak Parekh, and hopefully just one last question with Mr. Bhansali after that.
With RERA and IBC, real estate is seeing an increased level of transparency. And mortgage customers can have access to a range of financial products under one roof now. Change is inevitable, but change is beneficial. Change is welcome when it is beneficial to all the stakeholders. So the merger makes the combined entity strong enough not only to counter competition, but make the mortgage offering even more competitive. We will be able to offer all the variations in the mortgage product which currently as HDFC standalone we are unable to offer.
Bhansali, just to wrap it up with one final question, there are a lot of global commentators who've called this war as perhaps end of globalization and beginning of Cold War II. A lot of global attention is going around these two topics, and the sense is that it will change the dynamism of this decade.
So I think these are big trends. I've studied some of this for a long period, that how 4,000 years ago Indian muslin was going to, Egyptian mummies. But so globalization has always been on. It will continue to remain. Globalization of ideas, or military, or technology, merchandise. It slows down and it goes up. So maybe it is slowing down because new formations are happening. I don't think globalization is reversible in any significant manner. New countries need opportunities. There are those who get taken advantage and they get taken out by the market. Who take to undue advantage and they get taken out by the market. So I think some of that is happening. If China had become too large and people were not comfortable with their economic advantages, and maybe China is now creating room for others for reasons that we cannot understand. They're too complex, but they always come. So I think it is a readjustment period rather than complete reversal of globalization. Some of it is definitely happening.
So who will emerge on the right side and who will suffer the most when this readjustment essentially plays out?
Yes, indeed. So weak players who are not nimble. If you're a nimble player, you anticipate some of these things, then you make changes. But in business, you cannot be a winner all the time. So you lose, but you come back, and you come back stronger if you're well managed and you have what we call poise.
Really appreciate it. I'm so grateful to you on behalf of everyone from ET Now that you could accommodate this interview request on a busy Monday morning.
Thank you very much.
Let's take a break. That was Vallabh Bhanshali, chairman of Enam. I always look forward to hear and understand his view of the world. And it started with HDFC Bank and HDFC Limited merger, but his view on where the economy is headed, where globalization is headed, and where margin of safety is in this market is quite extraordinary.